rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Did you know that 55% of working Americans would choose a lower-paying job to work under a leader who inspires their brilliance? In today's fast-paced world, resilience isn't just a trait, it's a superpower. If you're feeling overwhelmed by life's pace with hurry and worry, struggling to find a way, discover the secret with Simon T. Bailey's bestseller, Resilience at Work, How to Coach Yourself into a Thriving Future. Get your copy today on Amazon and unlock your full potential.
Are you paying too much for term life insurance? A man age 50 non-tobacco user can obtain $500,000 of coverage for as little as $110 per month. Level rate for 20 years. That's right, guaranteed level rate for 20 years. If you're a smoker, there are great rates available for you as well. Call Term Busters for a quote. 1-800-908-7636. You're probably paying more than you should. Call 1-800-908-7636. Remember, call Term Busters. 1-800-908-7636. Sample rate for preferred non-tobacco rate class. Exam required.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker here in what is going to be one of the busiest weeks of news and data for the economy that we have seen in quite some time. Here's what we have on tap this week. Today at 10:30 a.m., nothing huge, but we do get the Dallas Fed Manufacturing Index, and the only reason that I point that out is just because we get a number of these. There's the Philly Fed, the Richmond Fed, New York Fed, Chicago Fed does one for this as well. And it just, again, you usually don't pay a ton of attention to these, but given the fact that these do include some details where they give some quotes about what businesses are seeing, you like to hear, just because anecdotes eventually become data when you have enough of them.
And Texas, especially being the massive trade partner of Mexico, I think.
Sure.
Texas is the largest export state in the country, I believe, and a lot of that stuff trades between the United States and Mexico, and so that will be interesting.
So we kick off with that today. Tomorrow's where we really kind of get into high gear. We get Case-Shiller home price and the FHFA home price index. Both of those are out at 9 a.m. tomorrow. 10 a.m. we get job openings, the JOLTS report for March. Again, this is 2 months backward looking since we're almost into May. But again, still interesting just to see what's developing in that series. Wednesday.
Can I give another Tuesday data?
If you want.
We'll probably have the results of the Canadian election, which I would normally say is completely irrelevant, but Trudeau's been in office for a decade, and there's quite a bit of tension between the United States and Canada right now, so I don't know.
Well, he's also not on the ballot.
Correct.
Yeah.
But there's a member of his party that's on the ballot that's being painted as Trudeau 2.0 by his opponent. There's a lot of tension between the United States and Canada right now. I don't think it'll tell you anything about the U.S. economy, business, or markets, but certainly will be telling in terms of next stage in the relations with Canada.
Wednesday, we get ADP employment report, which no one pays a ton of attention to, but it still happens, and someone's going to talk about it, so I note it here. We get GDP for Q1. Again, kind of backwards looking, not so much, not as relevant as it normally would be, but still a major report. Included in there, we get employment cost index. Also, this is one of those rare double dips that we get on Wednesday, where we get GDP and PCE data on the same day. Normally, they're separated by a day, but for some reason, the calendar lined up, and they both get reported on the same day. So we're going to be getting that. Other things that we're going to be getting on Wednesday for economic data, the Treasury Department is going to be announcing their quarterly refunding announcement, basically saying, hey, what kinds of bonds and bills are you planning on issuing this quarter? And always interesting just to see if they change the mix at all, given what we've seen in Treasury markets over the last 6 to 8 weeks. Thursday, we get weekly jobless claims and ISM manufacturing. Friday, we get the jobs report. So that's just what we have in terms of economics data.
Now earnings.
Then we turn to corporate earnings. Not much today. You generally don't see many major reports
Mondays
on a Monday.
and Fridays, no.
I don't know why it is that no one wants to report on a Monday. Is there any reason for it other than didn't want to look at it over the weekend?
I think it probably has a lot to do with Office Space.
The movie?
Yes.
What is it that you say
somebody
you
having
do
a
here?
case of the Mondays.
Okay.
Yeah.
Okay.
Domino's reported today.
They did, yeah.
That's because no one orders pizza on Monday. They did it on Friday. How'd
No
they do?
one orders pizza on
So
Mondays.
Tuesday.
When's the last time you ordered a pizza on Monday when not a few drinks
I
deep?
don't keep track of the days I order pizza, Chuck, but I'm going to order one later now.
Just to spite you.
spite you. Yeah.
I appreciate that. So does Domino's. So on Tuesday, you've got Visa, Coca-Cola, Booking Holdings. Those are kind of the big ones I'm looking at, along with Honeywell is going to report as well.
Yeah, there's some drug companies reporting, but I'm interested in the Booking Holdings because of what we've seen on the airline side of things.
Normally, I wouldn't really mention them, but it's okay. Like, what are you seeing from travel trends? Is there any meat on that bone as far as, convincing shifts that you are seeing in actual behavior and activity? Wednesday, couple big tech guys. Microsoft and Meta are the headliners. You've also got Qualcomm, Caterpillar, ADP reporting. So, again, some big ones with the potential to move markets. Thursday, couple more big tech companies, Apple and Amazon. And then you've also got Eli Lilly, MasterCard, McDonald's, Southern Company. So, you've got a number there. And remember, this week I said MasterCard and Visa report. Hey, what are they seeing as far as consumer spending trends? Anything new that they can tell us about what's going on? McDonald's, hey, what are you seeing? We saw Chipotle give some, kind of weak guidance last week as far as, hey, we're seeing some shifts in how, consumers are approaching this. Is McDonald's seeing the same thing, or is this the first sign of Chipotle having execution problems in the post-Brian Nickel phase now that he's moved on to Starbucks?
Yeah, that could be interesting. The Domino's earnings report, by the way, this morning, which I put in I don't put Chipotle and McDonald's in the exact same category. I do put Domino's and McDonald's in a similar category. Domino's earnings, not terrible, but they did not see same-store sale growth year over year, and I just found that interesting and compelling.
Couple other ones that are a little bit smaller, but also I think notable. I mentioned Starbucks actually reports on Tuesday as well. So are they seeing the same thing that Chipotle is, or did Brian Nickel just take his magic from Chipotle and he's over at Starbucks and all is well there? Other ones on Tuesday I'm curious about. UPS, what the heck are you seeing in shipping? Tell me what you are seeing in shipping. Other ones that are just kind of interesting to me. You've got PayPal reporting, so I kind of lump them in there with the credit card companies. They're smaller, obviously.
MasterCard comes on Thursday, by the way.
Yes. Also on Tuesday, you've got Royal Caribbean and Hilton Worldwide, so it gives you a little bit more color on travel. GM reports on Tuesday as well. These are not, the biggest companies, but they still do matter somewhat. Other ones that are, kind of quiet ones that I want to just see what's going on. MetLife reports on Thursday. And I'm just really interested in what MetLife is seeing on the insurance side of things. Obviously, we don't have that many pure play insurance carriers that are out there that are big companies these days.
You're just speaking of wildfires and all the other losses that have been out there, or what's your interest in the insurance space?
So I think the big thing, when you look at the areas that MetLife operates in, Obviously, like the big one is, in that term life space, like it's a big one, but they also do have, some smaller auto and home insurance lines.
Yeah.
I'm really interested to see if they're giving any guidance as to what's going on, not with wildfires and that stuff, but more someone's going to ask the question, hey, post-tariff, how are you dealing with rates to make sure that you don't get hit the same way you did after big jumps in price in 2021 and 22? What are they going to tell us about what's going on that side of things?
I used to have an auto policy through MetLife. I think we changed, or I know we changed, but I used to have an auto policy there, and given the repair costs that you are quite possibly going to see, what are you doing?
So, that's one. I don't know when, like, the other big ones that are out there, Progressive is publicly traded, so I don't see them on the calendar. But when they do, I'd be curious about them as well. But just an absolutely jammed week where there's going to be no shortage of stuff to talk about, even before we get to, hey, is there anything new happening with trade? Is there a trade deal today? Is there a trade? Like, you got that stuff going on too, obviously. So
to be clear, I mean, we would normally just be talking about four. Microsoft, Meta, Apple, and Amazon represent $9+ trillion of market capitalization between the four of them. They have been, the entire tech sector has been struggling more this year in the face of concern about economic slowdown. And so do they have any guidance for us? That's what we've been seeing in the few companies that have reported earnings so far is very little in the way of guidance on the future, which you can understand in this environment. Will these behemoths have any clearer of a picture for us?
Yeah.
If you had to rank them, what's the most important this week for you guys?
In terms of, like, economic data and earnings, everything out there?
What's the number one thing you're looking at this week?
And we're not talking about, like, we reach a trade deal with Mars to
just all the stuff you just listed.
Most important one this week.
Not important.
Jobs isn't important? Okay.
I just think you
would
have
seen...
Talk to
me, Mike.
I think
Talk to me, Michael.
I think you would have seen the weakness show up elsewhere in the jobs report were it going to show up. So I don't think Friday's going to tell us much on jobs.
That doesn't mean it's not important.
Doesn't mean it's not important, but if you see a massive miss, then sure, but I just don't think you're going to. So I'm not that concerned about the jobs report. Yeah, that's a tough one. What's the most important?
Having to pick one thing, I can't pick two. I have to pick one.
Sure, two's fine.
No, two's kind of wishy-washy.
Right,
Just
yeah.
grow up, like own it. Microsoft.
Ooh,
I was looking at Microsoft too.
Microsoft. I was gonna say it was between Microsoft and Apple. Amazon. Here's what they're gonna tell you: people have been buying a crap ton of stuff because they're nervous about tariffs, and there's gonna be no surprise on Amazon because we see it in all the weekly credit card data and stuff like that.
And there's gonna be no guidance either.
No, it's just gonna be like people. There's gonna be a ton of activity from Amazon. Apple, I was looking at and I'm like, okay, like obviously they have, the supply issues with China, so that's like kind of a big thing. How are they adapting there, given, their size, scale, and everything? But Microsoft, the reason that I put them out there is the thing that was starting to waver, even before any of the tariff stuff, the thing that was starting to waver was, hey, is AI still going to grow the way that people were hoping it would? And what's happening with CapEx there? Are you maintaining that? Is this still an area where you're going to be increasing your CapEx 50 to 80% a year? That is the big one that I want to see.
Yeah.
So I put Microsoft first.
Yeah.
And Domino's Pizza a close third.
Yep.
How's that for a Monday?
Like it.
Let's take a quick break here. When we come back, we will talk a little bit about trade, given that, we went through another weekend. Still no, discussed progress on anything between U.S. and China. We'll give you the lay of the land on that trade conflict when we return.
Tariff fever is in high gear. We've got the latest on what might be next and how long it might last. Only here on the Financial Exchange Radio Network.
The breadth of the stock market sell-off in recent days hasn't been seen since the early days of the pandemic. And while it's easy to say don't panic, if you're concerned about your portfolio, given the impact of these tariffs, now's the time to have that conversation. Hi, this is Mike Armstrong from the Armstrong Advisory Group. If the market correction has you anxious, or worse, rattled, give us a call at 800-393-4001. Let's get together and talk through your financial strategy, evaluate its strengths and weaknesses, and make decisions for the future that are in your best interest. These are challenging times times, but we've dealt with them before and are prepared to deal with them again. Our goal is to help you protect the assets that you've worked so hard to attain. You can give us a call at 800-393-4001 and request a no-obligation consultation. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Beneficiary planning and asset protection go hand in hand. Cushing & Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the keys to enjoying a peaceful retirement is flexibility. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Today, retirement planning involves lots of possible changes and challenges given all of the external factors that may affect your goals. So creating a budget for your retirement is vital to financial stability. Retirement comes with a number of monetary considerations, from how much money you'll need every month to managing your existing investments through market volatility. Our new guide is called How to Build a Retirement Budget, and it will offer a variety of options for your consideration that may lessen your risks when it comes to your planning. Call right now at 800-393-4001 and ask for our new guide today. That's 800-393-4001 or request it online from our website, armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and you can register right now for this year's 5K at Castle Island by visiting dav5k.boston. The event will sell out again, so if you're interested in participating, now's the time to reserve your spot. Come out and help support our great American heroes by joining us for the DAV 5K. Visit dav5k.boston to register or to make a donation today. That's dav5k.boston.
So, piece in Bloomberg, Trump China tariff set to unleash supply jolt on the U.S. economy. And this makes the case that basically you did have a lot of companies that tried to front-run tariffs and build up some inventory. Yep. Anywhere from, depending on the product, the specific niche, like all that stuff. Usually you heard conversation of, hey, we tried to buy like 1 to 4 months of inventory as the standard with, a couple months being, kind of the middle of that background. I think that ultimately it still varies based on, the size of the company and whether companies had the capital to be able to do so, because definitely with some smaller companies, especially ones that might be newer and not have significant cash reserves, they might not have been able to build up inventory in the same way. And so what this piece talks about, and this has been discussed in a few other areas, is that, look, to this point, you haven't really seen much in terms of disruption. And the reason why is that any goods that are on U.S. store shelves right now, they were made probably back in December or January. They then get on a boat, in China or Vietnam or Thailand. They, carry their little suitcases onto that boat, and they say,
I wasn't sure if those were oars or what they were that you were miming over here.
It's very much, it's 2x2. It's a Noah's Ark situation. You get like the wireless headphones coming on board, then you get the Wi-Fi adapters. Like it's like that.
Mm-hmm.
And they then spend anywhere from about 16 to 30 days generally on a boat heading to the United States if it's the West Coast, anywhere from about 40 to 50 days if it's heading to the East Coast. They get off there. They have, usually a 3 to 7 day trip that they take on a train or on a 18-wheeler. And then they finally get onto store shelves. But you do the math out, and it's generally somewhere between like a 35 and 60 day process to get stuff from China onto store shelves.
Sure. I was at Tractor Supply over the weekend, just yesterday.
Did you get anything fun?
A dog bowl.
You went to Tractor Supply to get a dog bowl.
I did.
It's a big dog.
I was dropping a kid off at a birthday party, and there's a Tractor Supply right next door, and so I needed a dog bowl. And you know what? Tractor
really
Supply,
big dog.
Very respectable pet supplies. 2 or 3 aisles.
In any case, it's something where if you are talking about, the potential for product shortages, even accounting for companies that might not have built up inventories beforehand, they probably don't start showing up until mid-May sporadically and mid-June to early July in terms of, any kind of real issues. So that's what this is talking about. What you are starting to see now is for companies that still deal with importing stuff from China, you do have a situation where it's starting to become apparent very quickly right now that these tariffs are adding significant costs. Either of you guys hang out on Reddit at all?
Once in a while.
Here and there, yeah.
Occasionally. Mostly when someone shows me something interesting, I'm like, let me dig around here and see what's going on. So AliExpress is a company that is an online retail service based in China. They're owned by Alibaba, and the premise of it is very similar to a Shein or Temu where, hey, they direct ship stuff from China in order to undercut prices of stuff that is made elsewhere.
Like on Amazon. Same stuff.
Correct.
Not necessarily branded, usually off-brand names or no-brand names.
Or copycats that simply can't be prosecuted because they're made in China. And
absolutely.
You see a ton of that stuff. So if you go over to the Reddit for AliExpress right now, what you see are a ton of people that are posting pretty much the tariffs, which are being added as a line item by AliExpress to all of the stuff they have. So as an example, I'm over there right now, and there is it's a sub-1 gigahertz transceiver for something or other. The subtotal on it is $66.98, and then in the additional charges section, it's $116.19 because of the tariffs that are being added there. There's someone else where, again, you kind of go through this. There's another one here where it looks like it's a toddler sweater, and it's $5.57 with an $8.29 charge added on top of it and $10 for shipping. So a $5.57 item becomes $25, and the person's like, no, I'm not buying this actually. This doesn't make sense. So this is what you're starting to see on the direct shippers from China.
Yeah, Temu and Shein are following the same exact thing.
They are.
Many, many items where the cost of import is now more than the cost of the item.
Yes. And so basically where this is heading is, and this is from, people that actually I trust in these areas, is, hey, if this level of China tariff is still in place probably by the end of this week, and very certainly if it's still in place by Mother's Day, you start running into problems because now you really have like an almost 30-day period from the implementation on April 9th where these have been in place, and companies either haven't been shipping stuff to the U.S. or shipping reduced volumes because they don't know what the demand will be, or prices starting to rise as companies say, yeah, we got to bring this in order to replenish inventory, and we need to figure out how the pricing is going to work on it.
Let's talk a little bit more about this after the break, because
there's a ton here to talk about.
There's this narrative that, hey, if this just returns to normal or if we cut tariffs, then everything's going to be fine. It might be fine, but I want to talk about what we expect in a few months regardless. Quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the rules of thumb that gets tossed around is, hey, just withdraw 4% of your portfolio each year and you'll be fine. Is that true still?
It can be, but it also leads to some confusing conversations because that 4% rule, one, is dependent on a very specific asset allocation that was recommended by the person that created it. And two, a lot of those things have changed over time and doesn't really account for the fluctuations that every retiree sees, right? You might retire and not start Social Security right away, in which case your withdrawals could be higher for a period of time.
What about on the other side of the ledger when you look at expenses? A lot of people say, well, I expect my expenses to go down. Maybe I only need 70 to 80% of my pre-retirement income.
Yeah, I mean, this one makes sense, right? Like, you know, you're right now making money, you might be putting money into your 401k, paying FICA taxes that you won't in retirement. But this one especially, I have to say, varies a lot from person to person. That's 70 to 80% of pre-retirement income. And think about it this way, right? Do I still have a mortgage? Might that mortgage get paid off at some point in my retirement? What sort of debts do I have? Am I going to downsize to one car? Are we going to need both? What sort of travel am I planning on? And so that 70 to 80% rule can be a good starting point, but really you need to start with the budget.
Our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. That number again is 800-393-4001 to request our latest guide, How to Build a Retirement Budget.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory and relatively quiet as Wall Street braces for a significant week ahead that includes new data on inflation, economic growth, and the labor market. Furthermore, we'll see first quarter earnings from 4 of the Magnificent 7 companies: Amazon, Apple, Meta, and Microsoft, in addition to other major names outside of tech, including Visa, Coca-Cola, and Eli Lilly. Right now, the Dow up by 110 points, about 0.25% higher. S&P 500 is flat, and the Nasdaq is down 0.25%. Russell 2000 is up by 13 points, just over 0.2% higher. 10-year Treasury down by 1 basis point, now at 4.25%, and crude oil down 1% on the day, trading at $62.38 a barrel. Nvidia pulling back by 2% after the Wall Street Journal reported this morning that Huawei Technologies is gearing up to test its newest AI processor, which the Chinese company hopes could replace some higher-end Nvidia products. Meanwhile, Domino's Pizza posted a higher profit and revenue in the first quarter as the pizza chain continued growth in international same-store sales helped offset declines at its U.S. locations. Domino's is up by over 1/3%. Elsewhere, Boeing up by over 2% after Bernstein upgraded the aircraft maker to outperform from market perform, where the firm said Boeing should be on a much firmer path than in 2023 as it recovers from the 2024 Alaska Airlines controversy and 2 737 MAX plane crashes prior to that. Sticking with the aircraft sector, where Airbus is up by 2% after the European company struck a deal to buy some factories that make Airbus parts from Spirit AeroSystems. The U.S. company is in the process of being bought by Boeing. And On Holding shares are up over 3% after the athletic shoe retailer was upgraded by Citi to buy from neutral, saying the company is one of the best positioned in its sector for navigating current uncertainty and could likely pass down cost increases if necessary. I'm Tucker Silva, and that's Wall Street Watch.
Mike, before we talk more about U.S. and China, I noted during our open that the one piece of data that we had this morning was the Dallas Fed Manufacturing Index.
Indeed.
Came out at 10:30 this morning. The previous reading was minus 16.3. The forecast was for minus 17. It came out at minus 35.8.
Double.
That's as pukey as you can get on a data series like this. And so basically what that is telling you is that manufacturers based in the Texas, Oklahoma, Arkansas, Louisiana region are telling you that things are looking really, really bad with their business during the month of April.
Which I don't find surprising, but for those listening out there, right, manufacturers are supposed to be one of the main benefactors of this tariff policy. The problem is twofold. One, they are very likely seeing a reduction in demand from consumers because consumers are across the board telling us they don't want as much stuff. And two, these manufacturers, anyone that manufactures anything complicated in the United States, which Texas does some complicated manufacturing, they import stuff from all across the world in order to do so, right? Even if you are really doing your best to just use U.S. products, maybe you're getting to 90% U.S. sourced. And if any of that manufacturing requires rare earth materials, forget about it right now.
Yeah, I'll read through just what we actually have in here. And basically the way that they do this, the Dallas Fed one, just so everyone understands, they ask all the manufacturing companies in their area to say, hey, are you seeing an increase, no change, or a decrease relative to the previous month? And so that's what it's measuring. So production came in at 5.1. And how they get to that, again, is basically the difference between the percentage reporting an increase and the percentage reporting a decrease. So 26% of manufacturers in their area reported an increase, 21.2% reported a decrease. That's how you get the 5.1. 52% said no change.
Yeah,
fine. Capacity utilization, minus 3.8. So you had more companies reporting a decrease in capacity utilization. The big ones, and this is where the stuff matters, new orders came in at minus 20. 14% of companies reported an increase in orders. 34% reported a decrease. 34% is a big chunk reporting a decrease.
Yep.
Growth rate of orders. Are orders growing faster or slower? Minus 22. 9.4% reporting faster growth. 31.4% slower growth. So even amongst ones that still reported an increase, you had a subset that was saying, hey, it's growing more slowly. Shipments and delivery time both coming in negative as well. The other ones that are going to matter, and this is where you get the concern about, there are two concerns. One is just general stagflation. The other one that I have that no one seems to want to pick up on is margins for companies. If you have new orders down, you can deal with that if your prices are coming down. The prices paid index here came in at 48.4. 54.6% of companies in this index reporting price increases from their suppliers. 6.2% reporting price decreases. The remaining 39% saying no change, but a huge move up there. Prices received for finished goods. This is the other thing. You could say, okay, my price is up or fine, but if I can,
Pass
charge
it along.
more,
Yeah,
great. Remember, prices paid for raw materials came in at 48.4. Prices received for finished goods came in at 14.9. So I can pass some of it on, but not all of it. Margins, it's a problem. Employment, minus 3.9. Hours worked, minus 6.4. Capital expenditures, minus 0.4. This is data where you look at it, and the question on this is going to be over the next couple months, does the soft data turn into hard data that is also slowing?
Because this is soft data.
It is entirely
It's survey.
soft data.
Yeah, it's all I know it sounds like a manufacturing number, sounds like hard data. It's not. It's surveys of managers in manufacturing companies in the Dallas area or the Texas area. But it's not telling you anything about their sales. It's not telling you anything about their actual profits. But it's telling you a lot of pessimism by manufacturers who, again, the goal is to make these companies the beneficiary of this type of policy. But so far, it has not turned out that way.
So let's get back to U.S.-China. I know you said that you had a couple other things you wanted to touch on here.
I have a question. So in your mind, what would be, if you are on the, forget about the whole negotiation because that's too complicated to give me a scenario. But if you are looking at the China tariff negotiations, the China trade war negotiations, and you are looking for a reduced cost of reduced tariff cost, what do you think is a reasonable best case scenario for you? Your Target, or you are some board game maker. What's a reasonable area for you to land in the short term? Yeah,
we're talking best case, not likeliest
and
case.
Reasonable best case. Don't give me 0% because I don't think
25.
That's likely. Yeah, I was gonna say absolute best case would be it goes to the same number that everybody else is facing, which is 10. I think that's very unlikely.
I don't think that's even reasonable.
Yeah. So if you are facing a 25% tariff, let's assume we get there in a week. What is, in your mind, what does that do to everybody as we're looking out there for items on the shelves? How does that affect me, person who shops at the local grocery store, the Tractor Supply, Walmart, Target, etc.?
For dog bowls.
For dog bowls.
For dog bowls, yes.
Yes.
Exclusively, that's where I go.
So there's a few different areas, and obviously the caveat is I'm not Mr. Supply Chain.
Yeah.
That's, I'm learning this from other people that spend their lives in it, but I'm not the supply chain dude.
I buy my groceries at Kia dealerships, too.
They got good muffins there.
Good vending machines.
Yeah. So let's talk groceries first. I think there's probably minimal disruption there.
Agreed.
Like, I don't think one of the things on my bingo card is any meaningful disruption to groceries because our groceries don't come from China. You can make a case that, hey, some of the parts that go into, the machinery that's used in farming and stuff like that, yeah, there's obviously Chinese components that are there, and if you have any shortage there, it could, play into it. But again, I think the other piece that you have to remember, we do import a decent amount of food as well, most of it from South America.
Yeah.
And South American tariffs of 10%, sure, it's going to have an impact at the margins and this and that, and prices probably move up, but I'm not really expecting shortages of food.
Agreed.
As part of
an
this.
Example in the grocery store item, I know somebody who manufactures a product that he sells to bottling manufacturers in the United States that requires a rare earth component in order to actually seal the bottles on, like, soda. That's going to take a while to play through to the grocery store if that actually has a real impact.
There's rare earth in my soda?
No, there's rare earth in the machine that seals your soda bottle.
Oh.
Yeah.
Interesting.
Yeah.
Interesting.
Needs magnets.
Yeah. How do they work? Yeah. Anyways, so I think on the grocery side, probably some modest price increases. And this meshes with a lot of the projections I've seen, which is, it's going to be uncomfortable because modest still probably means grocery prices moving up, depending on, the good and the time and this and that, 2 to 5%.
Yeah, but that could be offset by egg prices coming down, which they're
correct. Have, right? Or, I don't know, hey, China's not buying much pork, so now there's a pork surplus and your bacon's cheap. Like you can't really predict like exactly how that's going to all flow. On the side of consumer goods, if you have, again, like a step down to, again, best case scenario, 25% tariff within the next, by the end of this week, you probably have some sporadic things that are still missing here and there because, again, you've had 3 to 4 weeks of lower shipping. You got a bunch of people working in China that got to get back into the factory they've been out. They got to get things spooled back up. You got to get all your container ships, figured out, and so those costs are going to go up. So you probably have some sporadic disruptions, price hikes coming through, but it's nothing that is hugely disruptive. It's probably a modest inconvenience, and in some cases you're like, gee, it's going to take me like 3 extra months to get the chairs that I wanted because they were made in China or something like that. But it's not crazy. Where you get to the bad situation is if we're still sitting here after Mother's Day, like if we go another 2.5 weeks here and you still don't have any movement and now you're full month of 145% tariffs. I mean, think of it this way. If someone took your business and said, hey, I'm going to take 10% of your time in the given year and grind it to a halt and you still got to figure out how to make your numbers, good luck. Because it's just going to be a mess. Yep. Now, the middle case and where this probably ends up, where all the signs are pointing now, probably some kind of step down in the next couple weeks to a 40 to 65%, tariff rate. Still high prices. You're still going to have some issues, and some things won't be able to be imported as easily. But it's not the worst or best case. But none of us have any idea. This is a game of chicken, and you can't predict exactly what's going to happen there.
May I make a post-COVID public service announcement?
Don't buy all the toilet paper?
99% of toilet paper is made in the U.S. Don't go buying all the toilet paper. It's not necessary.
Yeah, but what about the really good Chinese toilet paper?
Yeah.
Yeah.
It's not a toilet paper issue problem, people.
It is. What is it with the TP?
I don't know.
Like, what is it?
Don't get it.
So I don't either. Let's take a quick break here. When we come back, what do I want to talk about here? No, I don't want to do that one. Oh, yeah, let's talk about how consumer behavior is actually changing on this based on how they think prices may change in the future. What do people think inflation is going to be, and how is that affecting their spending? Right after this.
The global trade war has roiled markets, and a recession could be next. Keep it here for breaking business news and complete market updates on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
The breadth of the stock market sell-off in recent days hasn't been seen since the early days of the pandemic. And while it's easy to say don't panic, if you're concerned about your portfolio, given the impact of these tariffs, now's the time to have that conversation. Hi, this is Mike Armstrong from the Armstrong Advisory Group. If the market correction has you anxious, or worse, rattled, give us a call at 800-393-4001. Let's get together and talk through your financial strategy, evaluate its strengths and weaknesses, and make decisions for the future that are in your best interest. These are challenging times, but we've dealt with them before and are prepared to deal with them again. Our goal is to help you protect the assets that you've worked so hard to attain. You can give us a call at 800-393-4001 and request a no-obligation consultation. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Piece in the Wall Street Journal: inflation fear is making some people spend more and others less. Well, gee, thanks. That's really useful. Appreciate that, Wall Street Journal. Basically what you have here is, look, if people are concerned that prices are going to rise, there are some people that front run that saying, okay, I want to, get ahead of those price increases.
See cars.
Which, by the way, can also lead to price increases. See used cars. On the other hand, you have people who might be saying, well, these tariffs are going to get negotiated down. I'm not going to do anything, and so I'll wait. Or people who say, I don't have the budget to front run tariffs, and so I can't do that.
Yeah, Besson had a comment, I think, over the weekend about consumer spending, and his point was, I listen to the soft data. I get that people are pessimistic, but they keep on spending. And my counterpoint to Scott Besson would be, this is always what consumers do. Consumer spending is not any sort of leading indicator. You might kind of think it would be. You're like, hey, I'm worried about the economy. I'm going to pull back my spending. Go take a look at the 2008 recession, which the 2008 recession actually began at the end of 2007. If you mark the tape on that, that's where it started. Consumer spending was increasing 4 or 5% year over year. You didn't get negative until December of 2008.
Because if people have money, they will spend it. Like it's the fourth law of thermodynamics.
You only start seeing spending dip down once the job loss has occurred. So again, some of this stuff is not a leading indicator. We've seen how pessimism over the last few years, for example, did not lead to a recession. But you can't look at the actual spending and say, consumers are still spending like crazy, so there is no recession. No, history would tell us that consumers keep on spending right until they can't anymore.
Basically, yeah.
Beneficiary planning and asset protection go hand in hand. Cushing & Dolan has a new guide out this month called How to Leave Assets to Beneficiaries. It can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now by calling 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. The number again is 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Piece in the Boston Globe. Massachusetts needs more affordable housing study says lots of it. I'll quote here. According to a new report this week, the state has only enough affordable housing for 32% of the 652,000 low-income renter households who need it. In other words, 441,000 families in Massachusetts who qualify for affordable housing can't access it, and that housing needs to be built. So here's the deal. If you could build 440,000 units of housing in Massachusetts, it doesn't matter if it's affordable or not. It's going to make housing more affordable. We just don't do that.
Yes.
And I'm not convinced that people who have the ability to make these decisions actually want to build more housing.
Who are the people that are capable of making these decisions?
So I would say people who vote inside the 128 loop.
Yeah. Yeah, I mean, Needham, where we broadcast this program from, just had a vote on this exact subject. It wasn't about affordable housing. It was not about building, rent-controlled units or anything like that. It was very merely, do you want to open up zoning to allow for multifamily along a big corridor of the town near public transit? And the answer was a fairly resounding no. And, I talked to people from town. The main conclusion was we don't want the traffic. We don't want the burden on the school systems. We're worried about this, that, or the other. But people, while they say they want more affordable housing, you go talk to people who actually own homes, and I don't believe them.
Yes. Yeah, I think that's fair.
You want more affordable housing? Build housing. It doesn't matter what type.
Build more housing, and it will become more affordable. It's kind of like cars. If you build more of them, the used cars get more affordable. We saw this a few years ago. Quick break here. Hour 2 coming up in just a little bit.
We're Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818, 800-378-3818, 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Hour two here on the Financial Exchange. Market's not moving a whole lot, at least when you look at equities. The S&P is flat. Well, it's technically down 1 point right now. The Dow is up 128 points, about 1/3%, but the NASDAQ down 40 basis points or 68 points. So, again, you just kind of got no real movement in either direction. It's just, what index do you want to look at?
Some context here, the S&P 500 now compared to its all-time high reached back in February, we're off just shy of 10% now. So, I mean, we were off close to 20, 2 weeks ago?
Yep.
So I find that context helpful. Are we flat now year to date? Let's see. Year to date, we're still down about 5.5%, but from that all-time high, down about 10% on the most useful index for the U.S. stock market.
So you've got that going on in equities. On the bond side of things, 10-year Treasury is down another 3.3 basis points to 4.233%. This mostly on the back of a puke-tastic Dallas Fed reading that we received at 10:30. Prior to that, 10-year Treasury had basically been flat on the day, no real movement, but the Dallas Fed Manufacturing Index came in at minus 35.8, which outside of COVID and one very brief reading back in late 2015 when the U.S. oil industry was being absolutely decimated by extra production from Russia, this is the only reading in this range since 2008.
Got it.
So it's like the Dallas. This is one where the best way I can describe it is someone that I follow on social media said, that the reading's bad when I actually click onto the Dallas Fed website to read it, because normally no one pays any attention to this stuff. It's just background noise. It's like it's a second or third tier report that no one really follows all that closely. We've got oil today down 89 cents a barrel on West Texas Intermediate at $62.13 a barrel. AAA national average for gas prices completely flat on the day, $3.14 and 9/10 cents. Again, there's been no major movement in either direction in this for like 3 months right now. I'm tempted to stop talking about it just because gas prices have not been moving. They've been between $3.10 and $3.20. I almost think since the beginning of this year. So it's just steady Eddie, no real movement on that side of things, and continuing to hang out in that range. Gold now up $41.90 an ounce to $33.40 and 30 cents. This also happening on the back of that Dallas Fed manufacturing report, as well as the other thing that might be moving gold a little bit. The last half hour or so, a number of reports coming out of India and Pakistan indicating the potential for kind of a step up in military engagement there, with potentially an open conflict after was this technically like a terrorist act last week? I don't know the specifics, but in the Kashmir region, and now you've got the real concern that you've got two nuclear powers that don't like each other at all, that may be starting to engage in an armed conflict in that part of the world. So toss that onto the geopolitical mix, and I have no insight into this. I don't know, but just throw it on the pile, because it's the geopolitical wood pile is getting pretty big these days.
It's getting pretty heavy. Yeah, it's getting pretty heavy and dry.
There's an awful lot out there right now, and it's dodgy.
Other big data points this week: we will get a jobs report on Friday, taking a look at unemployment in the month of April. We will get jobless claims on Thursday, ISM manufacturing, so some confirmation or denial of what we were seeing down in the Dallas Fed survey on Thursday, construction spending Thursday as well, and then the Fed's preferred gauge on inflation, the PCE index, will come out Wednesday at 10 a.m. So we are, aside from massive earnings calls, we are also going to see quite a bit of economic data.
Piece in the Journal of Wall Street: a reckoning for the Magnificent Seven tests the market. Ooh, what is this reckoning that we are seeing in the seven magnificent stocks, Michael?
The reckoning so far is primarily a question of investors' willingness to pay very high prices for these companies, right? Can you point to anything from the Magnificent Seven that points to a dramatic turn down in profitability, sales, or overall growth?
From Tesla, yes. For the other ones, no.
Right. So, okay, yeah, one of the Mag 7 has certainly seen some real data here. But the reckoning so far has been a question of, can you continue to grow this AI massive spending boom from all these companies? Will NVIDIA continue to benefit from it? What do tariffs do to the overall confidence of the business? And then, frankly, a bigger question on my mind is, even if you maintain your sales and your profitability, which, open question mark in the face of these challenges that we're talking about, are investors willing to still spend the same price on your stocks, given their overall concerns about other things going on?
So I think that in trying to figure out where this goes from a leadership perspective, we've got earnings on 4 of these companies this week. You got Microsoft and Meta on Tuesday, Amazon and Apple on Wednesday. It's really nice that they line up alphabetically. Like anyone out there?
Considered that.
No, like if any of our listeners like MMA, Wednesday, Thursday is MMAA.
Yeah.
It's, Brazilian Jiu-Jitsu between Mark Zuckerberg and Satya Nadella.
That I would pay
He
for.
never did the cage fight with Elon
not.
Musk, right?
No.
They backed out of that, obviously.
Well, they didn't even back out. They just never mentioned it again.
I think that they actually did have an announcement that they weren't going to do it.
Oh.
Or something like that. There was something along those lines. But you got 4 of these companies reporting this week. Mike, if you're trying to figure out what to look for in these earnings reports, I think the 2 things that are going to matter, and I kind of throw Amazon out just because I on the retail side, like it's just a whole different beast from the others.
Sure.
But here are the numbers that I'm interested in. What are you doing with your AI CapEx?
Yep.
Because that's a huge part of why investors have wanted to pay a premium, is the idea that, hey, there's something to this AI boom, and we want to be able to capture that. So what's going on with the AI CapEx? And the other piece, and this is more for Apple and Meta, just because, again, like, I know these companies all get lumped together, but they're all kind of
very different.
Like they're really different in terms of who they sell, what they sell. Like
Meta and
how it
Microsoft
works.
have very little in common.
No, but for Apple and for Meta, I think very much what are they seeing in the retail space as far as demand? In Meta's case, it's kind of a pass through in terms of, hey, are you seeing any shift in your ad spend on your platforms?
Right.
But what's your read on what consumers are doing and on what companies are doing on that side of things?
Yeah, I think Apple can tell you a fair bit about that. I think Amazon can tell you a little bit about what they were doing, and maybe they have some hints at sales most recently. For Microsoft and Meta, what they really tell me instead is what are businesses doing?
Yep.
Like if Microsoft sales plunge in certain areas, then that can indicate similar things from what we're seeing on travel demand and other items that you're seeing from businesses. If it keeps up, it's much more a question of, hey, are you seeing anything that would indicate a slowdown on any of these fronts? But Google reported last week, and they did not really tell us much that would indicate a slowdown from businesses.
No, they really didn't. Let's take a quick break here. When we come back, we're going to do a little bit of trivia, and then we're going to talk
Social Security.
You want to talk Social Security?
I want to talk Social Security.
Mike wants to talk Social Security after this.
Tariffs fears continue to grip markets. Get the latest straight from Wall Street right here on the Financial Exchange Radio Network. Beneficiary planning and asset protection go hand in hand. Cushing & Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and today is Jay Leno's 75th birthday. Leno began his comedy career in Boston back in 1973. 4 years later, Leno made his first appearance on The Tonight Show. Trivia question today: what year did Jay Leno take over as permanent host of The Tonight Show? Once again, what year did Jay Leno take over as permanent host of The Tonight Show? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the sixth correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal: Americans are claiming Social Security early, fearful of its future. Good, bad, or ugly decision, Michael?
Understandably ugly decision.
Understandably ugly. Walk me through that.
Yeah, so I think there is legitimate concern for fear regarding the Social Security program. Our elected officials are seemingly completely ignoring the problem. And that causes all sorts of sensationalist pieces to be written about the program's looming demise, because it is very true that the program will not have enough money to pay its benefits fully in around a decade. And that is understandably concerning for folks that are turning 62 or a decade out from retirement. My counterpoint would be there is no way that lawmakers cut benefits either to existing Social Security beneficiaries or anyone that, in my opinion, is over the age of like 50. I think it would be absolute political suicide to do so. And unless you are the top 1% out there, I really don't think you have anything to be concerned about when it comes to your benefits on Social Security.
So I take what you're saying with a,
grain of salt.
I hear what you're saying is what I'm trying to say. No, I take it with a lot of pepper. That's how I get through things. Let's say that I'm someone who comes to you and says this, Mike. That's all well and good. You say there's no way that could happen. But we've just lived through,
a bunch of things that we never thought could happen.
Bunch of things that we thought would, oil prices went negative 5 years ago last week.
Right.
Not something we ever thought we would see.
Right.
So forgive me for not believing you when you say lawmakers would never do that. How would you respond to someone who says that?
Yeah, look, my response would be, I don't have a response. You are right. They could eliminate the Social Security program.
Your pause gives me pause.
Yeah, they could eliminate the Social Security program tomorrow, but we always have to make decisions based on what we think is likely. And one thing is for sure. If you take your Social Security benefits at 62, regardless of the scenario that lawmakers choose on for how it's going to all work, your benefits will be permanently lower than they would have been had you waited, unless they do the most unlikely thing in my mind, which would be say, hey, we're reducing Social Security for everyone that's not currently collecting.
Sure.
That would seem pretty crazy, and especially from the lessons over the last few years, there's almost always a grandfathering grace period where you have time to do something. We will take a look, for instance, at the Social Security Fairness Act, where they went back a full year and reimbursed people for Social Security payments they didn't receive. The most important question that I think you should be asking yourself, though, when it comes to this decision is, if I am so afraid about this that I'm going to pull Social Security early, or I've just become convinced that that's the best strategy for me, am I certain that my financial plan can afford to do it? Right? People make decisions that, financial decisions that I might think are dumb all the time.
Mike, I make financial decisions that
Me
I
too.
think are dumb.
Yeah, all of us do.
Because not everything's a financial decision. Like, some of it is just, hey, I got to live my life. Even if it's not the best financial decision, yep, I want that. I'm not a coffee drinker, but yeah, I want that coffee every day. Or
I'm going to go to the casino twice a year, and I'm going to spend what most people would consider to be an obscene amount of money. I don't do it, but I know that people do, and I can understand it. And so the question about the Social Security is, well, it's not a question. Treat it the same way you would any other decision that involves your income or your expenses, because that's your Social Security is an asset. It's just, in the same way that your 401k or your other buckets of money are an asset, your Social Security future payments are an asset. And you have some choices when it comes to how to use that asset. And for a lot of reasons that I fully understand, we treat it differently because it's sponsored by the government. There's some mistrust. Sure. There's all sorts of emotions that come into Social Security. And the decision around it involves an unknowable factor. How long am I going to live? But the point with this is, just like investing, you don't want to make an emotional decision about Social Security. And what I'm seeing recently is a lot of fear-based decisions around Social Security. And I think that's probably a mistake. If you have questions about how Social Security is going to play into your financial strategy and whether or not you should claim early or later, make sure you know all the rules. Make sure you know about the earnings limits that apply if you're taking Social Security at 62. Make sure you understand how your Medicare premiums are going to be paid once you are claiming Social Security. Make sure you fully understand what your spouse is going to be impacted by your decision, right? I decided to claim it at 62. Well, did you think about how your husband, who's 5 years younger, is going to be affected by that decision?
Yep.
These are really important factors to consider around Social Security. And I'm not saying do or don't do. There are plenty of people that I do say, yeah, it makes sense to go pull Social Security at 62 in your scenario. But make an educated decision. Give the folks at Armstrong Advisory Group a call. The number's 800-393-4001. Again, if you have any questions about Social Security pensions or your overall retirement strategy, the number for the Armstrong Advisory Group is 800 393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do you want to talk babies or college now?
Babies.
Babies going to college or just babies?
No, just babies.
Okay. Piece in Bloomberg Opinion titled A Baby Boom in This Economy. And what it's talking about is basically that the Trump administration is very much on record in saying, like, look, we want to try to find ways to incentivize people to have more kids because we view not enough children as a real problem for the economy long term.
See Social Security.
Correct. The counter to it is, hey, you've got all kinds of like disjointed things in the economy here, and you also have currently the Trump administration slashing federal programs through DOEs that would typically be supportive of new parents. How does one reconcile this is the question that this piece is raising.
Yeah, and to be honest, I had heard about a lot of this stuff on the campaign trail. I feel as though it's taken a back seat. The stuff that I continue to hear about from Congress on the tax cuts plan that they want to put forward, taxes on tips, taxes on Social Security, on overtime continue to be brought up.
No taxes on those
right,
things.
Yeah, like eliminating the taxes on those sources. Have you heard anything about a child tax credit new over the last few weeks? It seems to me that either it's getting buried or it's not happening.
No, it's too early in the tax plan's progression through Congress, I think, to say anything definitive about it. So, you know me, I'm a big believer in, hey, don't really pay too much attention to what's being talked about until you get to like the final bill that's being signed, because things often do change over time, and it might just be that the other stuff is getting more press right now. But I don't know. Like, let's see if there's a tax bill that comes through in the next couple months or by the end of the whenever it is. I have no idea. If there's something that comes through, let's see if there's anything in there, like the additional one-time tax credit for having a new baby or things like that. Like I don't like to judge tax policy before it happens, because we've seen things change quite a bit from the drawing board to what actually ends up getting through.
We have.
Let's take a quick break here. When we come back, we've got the trivia answer, and then we're talking about whether or not college is still worth it.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
It happens all over Massachusetts.
Can you tie my
in every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the issues that we've seen for retirees in the last several years is significantly higher home insurance premiums and property taxes going up as well. How do people attempt to navigate this but still stay within the budget they had laid out for themselves?
Yeah, look, the cost of home ownership, I don't think this is a surprise to anyone. Whether you are buying a home for the first time or you are just seeing those insurance and tax rates that you mentioned going up, it is really impossible to avoid. And I think that's where that flexibility in the budget comes in and needs to be recognized. Because, for instance, you might have factored in a huge cost savings by moving to Florida a decade ago.
Sure.
A lot of that has been eaten up over the course of the last several years. And so you have to have a budget that can evolve with your lifestyle over time.
How often do you review that budget?
You know, I think it's important to at least get a grasp on it once a year. And you can really see costs fluctuate a lot during those periods of time. But those flexibility points are really important because you have to account for inflation, and different things inflate at different rates. So, for example, you might see that your costs of health care rise dramatically in your later years, both because you need more of it and because health care costs inflate faster than other types of costs. And you have to build those into the budget, even though you might be paying nothing for them today.
This month, our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. The guide again is How to Build a Retirement Budget, and the number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place to take your next vacation. Enjoy spectacular beaches, world-class cuisine, and a wide variety of water sports. Don't miss your chance to visit America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com for more information and to book your trip today. That's visitusvi.com. Trivia question today was, what year did Jay Leno take over as permanent host of The Tonight Show? That would be 1992. Martin from Berkeley, Mass. is our winner today, taking home a brand new Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece in, is this Washington Post?
Yes.
Piece in the Washington Post, with the U.S. cracking down on student loan payments, is college still worth it? There's a lot to unpack in that headline, most notably,
cracking down.
The United States is not cracking down on student loan payments. They're just making sure that they are resumed and counting them towards your credit score again in a way that they haven't in the last 5 years.
Cracking down would imply...
Right,
like
their loans, like...
Hey, cracking down would be like, hey, Jimmy... So you got that loan outstanding for the next 10 years. You better pay it now. Like,
yeah.
That would be cracking down on student loans. Like, we lent you the money for 10 years. pay it now, we're going to break your legs.
The United States government is currently cracking down on illegal immigration. I think
Yes.
that is fair to say.
Yes.
They are not cracking down on student loan payments. They passed a series of laws that suspended the payments on the loans during COVID, and those have resumed. That is very
so will
different.
collections. Like, collections will resume just as they were in, like, for most of history since student loans have been around.
Yeah. So, okay. Let's start at square one there.
Yes.
But more important question, is college still worth it? That's a more interesting question to me.
So, here's the wishy-washy but also right answer. Maybe. And here's why it's the wishy-washy but also right answer. If you are paying private college prices for a school that is not in the top 25 schools by whatever publication you want to trust, it's a bad deal. And
so I agree that it is a bad deal, but I will also say that compared to someone with an only high school diploma, you are likely to still come out on top over your lifetime.
You're missing the point, though.
Okay. Yeah, that's fair. I want to make our comparisons.
I'm pretty defensive about this because I've thought a lot about it.
Sure.
And here's my view, is if you're not going to go to a top 25 school, which is the vast majority of people,
right,
go to the cheapest school that you can go to and you will get a great education still.
Mm-hmm.
Because there are more good professors than there are good schools. Like, there are good professors everywhere.
Yeah.
This is something I come back to with college all the time. Whether you go to Harvard or whether you go to whatever the theoretical worst school is in the country, there is someone there who has spent their entire life learning about the subject that they are teaching you, and they are required by that institution to hold office hours with you so that you can personally ask them questions. You will get out of college exactly what you put into it, whether it is at Harvard, McNeese State, whatever else, like whatever's out there. You will have like the ability to do that. Now, if you go to college and all you do is party, you're going to have a great time.
Yep.
And ultimately, you're going to get out exactly what you put into that too, which there are some interesting studies, believe it or not, that actually show that depending on the school, GPA does not have as much of a correlation with your success as the amount of time that you spend hanging out with friends, because in some situations, the networking effect is actually stronger than what you learn in college. But I don't want to distort this too much. More or less, look, if you're not going to go to a top 25 school, you will get a great education at anywhere else, but spend the least amount of money possible to get the best bang for your buck.
Yeah.
Is kind of where I land.
The median college graduate with just a bachelor's degree earned about $80,000 annually, compared with about $47,000 for the median worker with only a high school diploma. That's according to data from the New York Fed, and I buy that. What I have not been able to find any reliable information on is I would love to see a comparison of incomes with a bachelor's degree compared to incomes with a trade certificate. For whatever reason, there's not much reliable data on that from what I've been able to find, and I suspect that that gap is much narrower for a 4-year bachelor's degree educated individual versus somebody who spent a year or two in trade school and got that certificate and is working HVAC or electrician. That's the piece that I don't have an answer to. And we've seen a lot of college enrollment shift into those types of certificate programs. I think to the general success and contentment of those who have done so, but I don't really have a financial analysis on one versus the other. Everything that I've seen continues to be, hey, if you only graduate high school, there are going to be very few opportunities for you in this economy.
Now, this also gets into part of my spiel, which is the question of, should we be looking at college purely as a financial transaction? Because Mike and I have talked, like we talked about it with Social Security, we talked about it with other things. There are plenty of times that people make decisions for their life that are not purely for economic maximization.
Sure.
If you've ever played a round of golf, you've done this. If you've ever gone fishing, you've done this.
Mm-hmm.
If you've ever gone on a vacation, you've done this. Because none of those things are about economic maximization. Rather, they're about actually living your life. So this is the part where I say, look, stop and think about what you actually want to get out of a college experience, because ultimately it's just like a marriage in that You can't depend on your spouse to be everything. People say, oh, I married my best friend. No, your best friend is the person who you go with in order to get into trouble. Your spouse is the person who tells you, don't get into trouble. You can't have all those roles assumed by the same person.
Okay.
You can't put everything. You
walking
can't
through this analogy. Keep going.
You can't put all of your burdens on your spouse the same way you can't put all of them on college. College can't be everything to you at one time. It can be a couple things, but it can't be all of these. So part of this is also, what are you trying to get out of college? Is it, hey, I'm trying to maximize my economic value of learning? That's one thing. Is it, I want to be exposed to new ideas and new perspectives? That's another thing. Is it, I want to be able to talk to, the brightest people in this field because that's what I want to study in my life? That's an entirely different thing.
I want to live Animal House and I have the money to do so.
Correct. Like, they're all you have to be honest with yourself about this, because I think part of the problem with college is that, like, often we want it to be all of these things. And you can't have it do that.
Well, and I'll also say that I think it's very unreasonable of us as a society to try and allow a 17-year-old or a 16-year-old to make that decision. I struggle with that a little bit. I think we as parents maybe put a little bit too much of that on a person who is not yet been alive for 2 decades.
Yes and no, because I also think that, like, a really valuable part of what college is giving people a place where they can make mistakes without it having catastrophic influences on the rest of their life, because, hey, you're away from home for the first time for many people that go.
Mm-hmm.
And, like, you want to have the ability to say and do stupid stuff and not have it come back to bite you 20 years later just because, hey, you made a mistake because you were young and dumb, because we all were young and dumb.
Yeah, that's a lot more difficult today than it was even 15 years ago.
Yes. So thus concludes Chuck's college conversation. If you'd like to come to the next...
Are you offering consulting?
Good Lord, no. Are you kidding?
Do people pay you for this?
No, and for good reason, because I can't help you get into college.
Yeah,
let's take a quick break here, and when we come back, we'll do a little bit of stack roulette.
Market volatility is at its highest point since the pandemic. Keep it here for the most comprehensive coverage of the global trade war. This is the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions. Beneficiary planning and asset protection go hand in hand. Cushing & Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the keys to enjoying a peaceful retirement is flexibility. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Today, retirement planning involves lots of possible changes and challenges given all of the external factors that may affect your goals. So creating a budget for your retirement is vital to financial stability. Retirement comes with a number of monetary considerations, from how much money you'll need every month to managing your existing investments through market volatility. Our new guide is called How to Build a Retirement Budget, and it will offer a variety of options for your consideration that may lessen your risks when it comes to your planning. Call right now at 800-393-4001 and ask for our new guide today. That's 800-393-4001, or request it online from our website, armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Mike, do you know anyone in your life who, no matter what they tell you, you just don't believe what they're saying?
I haven't in a while, but yes.
So, Billy McFarland is that person, not in my life, but in all of our lives. Billy, if you're not familiar with him, is the person behind the Fire Festival, along with Jarul, who, tried to put on this great concert and instead gave people bread, cheese, and FEMA tents and no entertainment on some island in the Bahamas.
Near the Bahamas, yeah. Yeah. And then went to prison for it.
Went to prison for it. And generally, when someone goes to prison, I'm of the opinion, hey, you did your time, come out, you're a better man, whatever. That's what you hope for, at least.
Sure.
Billy doesn't seem to have gotten there.
No.
So, look.
In fact, maybe doubling down.
Part of this is that he still owes $26 million in restitution from the first Fire Festival.
Oops.
But, late in 2023, he announced, hey, we're going to have Fire Festival 2, and it's going to happen in December of 2024. Then in September of 2024, he said, no, it's actually going to be on 3 days in April of 2025 on a private island off the coast of Mexico. The Mexican government was like, you've never talked to anyone. We have no record of this taking place, and this is not what we think is going to be happening. So finally, tickets went on sale in February of this year without any lineup announced. And the ticket prices started at $1,400, a veritable bargain in today's day and age.
Yes.
Yeah,
of course.
I mean, gosh. And then you also had a $1.1 million ticket offer for the Prometheus God of Fire package, which included a 4-stateroom yacht and private chauffeur service.
No, it didn't.
Narrator, it didn't. The website said at the time the festival would be held on Isla Mujeres, a tropical island off Cancun, Mexico. But again, within days, the local government was disputing it, saying, quote, we have no knowledge of this event nor contact with any person or company about it. So, instead, Billy has now said that he's putting the Fire brand up for sale.
What brand,
Well,
guys?
here's the thing that you start to realize about Billy, is that basically he can't figure out how to actually make money putting on the concert because it's just not what he does. But he thinks maybe he's ginned up enough interest to somehow be able to sell this brand to someone who then, quote, can have the scale, experience, and infrastructure, and it's time to pass the torch.
So let's start with a starting point here, Chuck. You and I do not regularly attend music festivals. Is that fair to say? I don't.
Not since my early 20s.
Yeah, I have gone to one, but it has been a very long time. So I'm not part of this crowd. But my guess would be the brand reputation. Right? If that's what you're selling the goodwill of Fire Festival, the entire idea. Is that brand not associated with exactly what you just described, a complete and utter disaster of stranding people on a Bahamian island? Bahamian
Rhapsody.
Different. Yep. Bahamian island with nothing but cheese sandwiches and FEMA tents. Like, what is that brand worth? And does it include the $26 million in debt restitution payments that you need to make?
No, like the only way I would go to a fire festival is if someone paid me to go and cover the disaster of what it could potentially be.
Yeah, I mean, I would need a pretty big insurance policy on that one.
And obviously no one's going to finance that at this point. So I don't know what anyone would pay for this, because if you hear Fire Festival, all you think about is that disaster. Do you want to pay for it? Now, to be fair, it is a recognizable brand.
True.
But so was the Edsel, and it still didn't sell.
Yeah, the Hindenburg is pretty recognizable
Correct.
These days.
You know, like, there's a reason why no one travels by blimp anymore.
Why? What happened?
Oh, don't spoil it. Don't spoil people.
It's a famous band.
Oh, boy. Yeah, so that's what McFarland is up to.
So, yeah, I just... I don't know. It's... Yeah, you know the old story of the frog and the scorpion?
No.
Are you kidding?
I think so, but you're going to have to remind
Frog and a
me.
scorpion are sitting on one side of the river, and the scorpion says, hey, carry me across. And the frog goes, no, you'll sting me. And the scorpion's like, no, I won't. And then the frog's like, okay, fine. And then halfway across, it stings the frog, and the frog's like, why'd you do that? And the scorpion goes, it's my nature. Sorry.
Yeah.
That's just what we're seeing here.
Yeah.
And... yeah, and unless you think that this is, you know, just being fooled twice, Billy McFarland's thing before the Fire Festival was like a black card service in New York City trying to get access to exclusive events that could not provide access to exclusive events.
I didn't know that.
This is like, it was called...
this doesn't work here.
Hang on.
This is not... Might as well give me a Stop and Shop card. It doesn't work.
Here we go. It was called Magnus's, and Mignises, and basically it was running in like the late 2010s. And I'll quote here from Business Insider. A Business Insider report 3 months prior to Fire Festival explained that there were many complaints from Magnus's members, including event tickets and trips being canceled or rescheduled. According to Bloomberg, while it's clear that Magnus's was already having difficulties, the festival's very public failure and McFarland's subsequent arrest might have been the final blow. So there's kind of a pattern.
He's just a scam artist of all scam artists.
Right. Look, I respect the hustle on one level, but
yeah,
man, like, what is going on there?
Yeah.
And by on one level, I'm like, have a little bit of self, like, I mean, I think he knows who he is.
So
he's just going to keep being that.
How soon before we're all signed up for the multi-level vitamin selling plan?
That's not his thing.
No, it's all event-based.
He tries to sell status, but can't deliver status.
Yeah.
Like, that's all it is, you know?
That's
what else
fitting.
you got?
Southwest. First of all, the stock price has lost about a fifth of its value so far this year. They've made some shakeups. They've added investors, changed up the board, and are in the midst of a pivot of their overall brand. And one of those pivots is changing their boarding status, changing what they charge for bags, and realigning themselves, much like most other airlines. And I was suspicious of the strategy to begin with because Southwest has dominated the industry with one reputation, which is value. And if you start charging baggage fees and changing and making yourself more like every other airline, what does that exactly stand for? But it also might be getting paired with like the worst possible time to be making that shift. Had you made this shift 5 years ago and had maybe a first-class cabin that flyers could take advantage of in this post-COVID stage where people were paying for that stuff, I think it could have been successful. What I'm worried about is, does this change coincide directly with flyers and travelers looking for value again? And does Southwest still maintain that same reputation that they had previously of the value brand in flying?
It's a good question.
I don't have an answer, but it is a reasonable question. To be fair,
it's
counterpoint.
The one that they're betting the farm on, basically.
Right. To be fair to the counterpoint, the only other one nationally out there I can think of would be Spirit, and they're in bankruptcy. So, they might still have that brand reputation.
We're going to take a quick break for the next 24 hours, but when the sun comes up tomorrow,
we're going to sing Bohemian Rhapsody.
We'll see you tomorrow on the Financial Exchange.